Hi there, I welcome you to my video about the preparation of financial statements for a sole trader. Now, in this video, we are going to learn how to prepare the basic financial statements of a sole trader, how to come up with a simple financial statement, because this video is specifically for students of Yobuteb, those who are doing bookkeeping. So this video is for those students specifically. And when you try to look at their exam, they normally ask them to prepare the basic financial statements of a sole trader, those simple financial statements to come up with the income statement as well as the balance sheet. So I'll start with the income statement, which is also referred to as the statement of profit or loss. Why do we prepare this income statement? Now, the income statement is prepared to show the reader how much profit or loss the business has generated during the reporting period. Of course, we have the format of the income statement. You need to understand, you need to learn this format and understand it very well. The income statement, as I've told you, we prepare it to arrive at the profit or loss figure at the end of the reporting period. So this is the format. Of course, you have to write your heading, where you have to write the name of the business, statement of profit or loss, or income statement, depending on what the examiner has used, for their ended dash dash dash. Of course, you have to look at the question and see, when are we reporting? When are we preparing these financial statements? Is it for the end of 31st March 2023? It will depend. But of course, we have to show the name of the entity or the name of the business, then the statement they are preparing, that is the statement of profit or loss, or the income statement, then for the year ended, dash, dash, dash. Can be the year ended 31st December 2023, 31st December 2022, or any other date, depending on what you have been given. So here we get the sales, because of course the business will be having goods or products that it will be selling to its customers. So we have to get the sales figure. Then we have to list the return inwards. When we talk about return inwards, here we are referring to the amount of goods that have been returned by the customers. You sold your goods to the customers, but now they're returning back some of the goods. So the return inwards reduces the sales. Then we come up with what we call the net sales. Then after getting the net sales, we have to list the cost of sales. To get cost of sales, we get the opening inventory, we add the purchases, we add the carriage inwards, then we less the return outwards. Return outwards, this is as a result of you returning back some of the goods you purchased from the suppliers. You're returning out goods to the suppliers, meaning that our purchases figure has to reduce when we have the return outwards. That's why it's that the return outwards, I'm showing this in brackets because it will be deducted. Then you also have to list the closing inventory. That is the value of the unsold inventory at the end of the period. Then we add and subtract, then we come up with our cost of sales figure, which we transfer to the second column. Thereafter, we get our net sales figure minus the gross profit, minus the cost of sales to arrive at what we call the gross profit. Then after getting our gross profit, we normally add some other incomes. For example, rent received, commission received, discount received. We add all those incomes in the first column, then we transfer the total incomes to the second column. Then we add them to the other incomes to come up with what we call the total incomes or gross incomes. Then thereafter, we have to list the operating expenses, rent, electricity, telephone charges, wages and salaries, motor expenses, the discounts allowed, carriage on sales, depreciation expense, bad debts, etc. So we add all these operating expenses, then we transfer the total to the second column. We deduct these total operating expenses from our total incomes up here to come up with our net pro, to come up with net profit. So you have to learn in this format because according to your past paper questions, we say that the examiner normally asks you to prepare the income statement. So you have to learn in this format and then you practice through the past paper questions. Then from there, of course, we have to look at the balance sheet, sometimes referred as the statement of financial position. Why do we prepare the statement of financial position, or why do we prepare the balance sheet? Of course, the purpose of the balance sheet is to reveal the financial status of a business as of a specific point in time. This statement shows what the business owns and controls. Those are the assets. It also shows how much it owes. Those are the liabilities, as well as the amount invested in the business, which is capital. So this statement presents the assets, the liabilities, and capital of the business. This is the layout of the statement of financial position or the balance sheet of a sole trader. We start with assets, and under assets, we start with those non-current assets, where we have land and buildings, plant and equipment, the fixtures and fittings, the motor vehicles. Then we move to the current assets, where we have inventories, accounts receivable, all the debtors, cash, bank. So we add the current assets, we take the second column, we add it to the total non-current assets to come up with the total assets of the business. Then we move to capital and liabilities. We start with the capital, where we get the capital at the start. We add the net profit from the income statement. Then we list drawings. Then we get the net figure here, the total capital at the end in the second column. Then we go to the non-current liabilities. Sometimes you may find that the business has a long-term loan. You present the non-current liabilities. Then you move to the current liabilities, where we have the accounts payable, corporate creditors, bank overdrafts, etc. You add them. So you add your current liabilities with the non-current liabilities and capital. Then you get total equity and liabilities. So you have to learn these formats of the balance sheet and the income statement, and you understand what comes after the other. And of course, we'll do that through question practice and reading. Now, I have a sample question here for Ubuntu bookkeeping, which we are going to use as our sample question to show you how you can prepare the financial statements of a sole trader. So this is for April-May 2023 series. What I'm going to use to show you how to prepare the income statement and the balance sheet. But don't forget to subscribe to my YouTube channel. Don't forget to share with those other friends who are also doing bookkeeping as course unit this semester. Don't forget to ask your questions. Don't forget to like. Don't forget to share. So this is our question paper, Yobuten. So we go to the last question. That is question 7. You are provided with the following information obtained from the trial balance of Cambodia and Company Limited as at 30th June 2017. So this is our trial balance. You have the purchases, the opening stock, carriage on sales, discount received, discount allowed, the sales, return outwards, return inwards, bank overdrafts, taint and rates, debtors. I think this was supposed to be rent and rates. Then the debtors, capital, creditors, cash, salaries, land, furniture, drawings, and motor van. Then you also have some additional information whereby they are telling you that stock at 30th June 2017 was valued at shillings 8,500 required. prepare the company's income statement for the period ended 30th June 2017, and then the balance sheet as at that date. So that is the information which you are going to use to see how we can prepare the income statement and then the balance sheet. So I'll use this as my working page. So you have to write the heading very well. That's the first thing which you have to do. So this business or this the entity is so that is our heading. You have to come up with that heading. You have to come up with a heading. Let me try to underline it. Underlined very well. Just you have to be neat in your presentation. So that's what I have. The amounts are in UDX, so you have to show that. So we start. We start with the sales, check through the question, get the sales. Sales, we have 131,000. But of course, we see that we also have return inwards. We sold goods, but the customers returned back some of the goods. We have to reduce our sales figure by the return inwards, and this is 11. This is 11,000. 131 minus 11,000. This gives us 120. And this is that is our net sales figure. Before that, the net sales. Then after getting the net sales, we have to go to the cost of sales, the cost of the goods we have sold, cost of sales. Under cost of sales, we get our stock from 1st July 2016. That stock is 13,000. So that is your opening stock, but of course you have to add the purchases. Add the purchases. In the question you have purchases of 73 thousand. But of course, we returned back some of the goods. So we have return outwards of 2,500. We don't have carriage inwards, but of course, if we have carriage inwards, we have to add that, but we don't have. So the figure we get is what we call the cost of goods available for sale. We get 13,000 plus the purchases, then minus 2,500. This gives us 83,500. So this is the cost of the goods This is the cost of goods available for sale. But of course, we have some that remain unsold at the end of the period. Closing inventory for stock, that is 8,500. So your cost of sales now is 75,000. So we get our net sales minus the cost of sales to come up with what we call the gross profit. The gross profit is the sales less the cost of sales. So our net sales, we have 120 minus 75,000, giving us 49,000. So that is your gross profit. Then after getting the gross profit, you have to add the other incomes. We'll say add the other incomes. And under other incomes, we have the discount received. Discount received, which is 1 to 60. That is your discount received. And it's the only income which we have in this case. So we add it to the gross profit to get what we call total incomes. Total incomes, 45,000 plus 1 to 60. This gives us total incomes of how much? Of 46,260. Then after getting total incomes, we have to less the operating expenses. Less the operating expenses. Have to less the operating expenses. We less the operating expenses. Let me just continue from here because I don't have space down there. Let me just continue from here. So we list operating expenses. Under the operating expenses, we have carried on sales. So you write carried on sales. That is like carried outwards. Your carried on sales is 2,000. You have discounts allowed your customers. This is 1,800. You have, this was supposed to be rent, and rates is an expense, 5,960. We also have the salaries, that is 14,600. Those are the operating expenses which we have in this particular question. So you have to add these expenses. Let's try to add them. So 2,000 plus 1,800 plus 5,960 plus 14,600. This gives us 24,000. This gives us 24,360. So when we get our total incomes up there, we list these operating expenses, then we get what we call the net profit. So we get what our net profit. So net profit is the gross profit less the operating expenses, but in this case, it is the total incomes of 46 to 60 minus our operating expenses. 46 to 60 minus the operating expenses, we get a net profit of 21,900. That is our net profit for the period. So this business, or this company as they are calling it, made a profit of 21,900 during the period. So this is our net profit figure. This is our net, that is our net profit figure for the period. So let us see how we can now come up with a statement of financial position, or what we call the balance sheet. Still, you have to write the heading. This is Good Company Unlimited balance sheet. Now this is prepared as at 31st, 30th. This is 30th June. You underline this very well. So I will simply use two columns for purposes of simplicity. and understanding. For this level, we don't have items like depreciation, accumulated depreciation. So it is just some simple balance sheet if you're trying to come up with. So we have our UGX. So here we start with the assets. We start with assets. And under assets, when you are presenting the assets, we start with the non-current. We start with the non-current assets. Now, the non-current assets are those assets that were not bought primarily to be sold, but they are to be used in the business, and they are expected to be available for use to the business for a long period of what? A long period of time. So we start with the non-current assets. Non-current assets. Under these non-current assets, according to the question, just to take you back, you see we have land, furniture, the motor van. We have land, furniture, the motor van. Those are the non-current assets which we have. So we can present them first. So we have land, and the cost of land is 13,000. Then you have the furniture, which is 7,200. You have the motor van, which is 116,000. These are the non-current assets which you have. Those assets which we expect to be available for use for more than one accounting period. So we add and get their total. So 13,000 plus 7,200, then plus 116,000. This gives us 136,400. 136,400. Then, of course, from the non-current assets, I'll move to the current assets. We move to the current assets. We move to the current assets. And under current assets, we have the stock. That is at 30th June 2017, the closing stock, which is 8,500. So our closing stock is 8,500. 8,500, that is the stock. Then we have to show the data, sometimes referred as the receivables. This is 2,800. We also have cash. Cash balance is 4,000. There will also be bank, but this time round it's a bank overdraft, so it's not an asset, but instead it's a liability. If it was not a bank overdraft, we'll look at the trial balance given. Your bank overdraft, the balance is on the credit side. But if it was a bank balance with a debit If it was a bank with balance on the debit column of the trial balance, then that would have been a current asset. But now, being that it's an overdraft, that's a liability to the business. So we have 8,500 plus 2,800 plus 4,000, giving us 15. So this is 15,300. Now we add our current assets. We add them to the non-current assets to get what we call the total assets. Get the total assets. So here we have 151, 500. This is our total assets figure. And to arrive at that figure, as I've told you, we have added the total assets, that is getting non-current assets, plus the current assets to arrive at our total assets figure. Okay, so let's continue. Now we move to capital and liabilities. We move to capital and liabilities. Capital and liabilities. And I'll start with the capital. Our capital is given as 124,100, 124,100. Now on this capital, we have to add the net profit. When a business makes a profit, the capital increases. If it's a loss, the capital will reduce. Our net profit is 21,900. So we add 21,900, but we have to less the drawings. The owner of the business took out some money worth 12,000, so the drawings reduce the capital. How much will be our net? So now out of the capital which we had at the start, 124,100, we made a profit of 21,900, but we have withdrawn 12,000. So meaning that our capital at the end of the period is 134,000. So here we have 100. That is total capital. That is total capital. Non-current liabilities, we don't have non-current liabilities, but we have some current liabilities there. Under current liabilities, we have the bank overdraft. Bank overdraft, we have 13,000. I can use the first column, we have 13,000. Then we also have the creditors. We also have the creditors. And the creditors we have 4,500. Just a continuation. Creditors we have 4,500. Those are the only current liabilities which we have. So you add the two, that is the bank overdraft of 13,000. Bank overdraft of 13,000. You add the 4,500. We have 17,500. 17,500. So we get the current liabilities total 17,500. We add them to equity or capital of 134,000. We get 151,800. And now this is our now our total capital and liabilities. Total capital and liabilities. So that is your balance sheet according to that question of May 2023. Bookkeeping Limited. The balance sheet, this carried 10 marks, and then the income statement also carried 10 marks. Remember, when you prepare in the balance sheet, don't forget the accounting equation, which states that assets should always equal to the total of capital and liabilities. The accounting equation that always our total assets should equal capital plus liabilities. Don't forget that accounting equation whenever you're preparing the statement of financial position, or what we call the balance sheet. The total assets is should always equal to the total of capital and liabilities. So what you're going to do, you're going to subscribe to my YouTube channel such that you don't miss out any videos, because I'll be uploading many more videos. I'll be answering all those questions in that question paper. Yeah, so thank you for watching. Don't forget to subscribe, don't forget to share with your other friends. Remain senior Huntington. Bye bye.